Today's date is 13th of July 2025, and I want to run an experiment for the next 10 years. Now, this is my disclaimer. This is not a financial advice. If you want to follow through, don't follow through with any huge sums of money. You can just do it with a throwaway money. And then, you see, maybe after 10 years, you become a millionaire. Maybe. It's not a guarantee. I'm going to take you through my calculations. I'm going to take you through the financial tools I want to use, what I've learned throughout the years, and how I think for me this is going to work. But this is not a guarantee for anyone to follow through. I'm just trying to document this, and hopefully in the next 10 years it comes out as expected. Now, I start by looking at the ROI of Bitcoin in the last 10 years. So in the last 10 years, let's look at the returns. If you were to invest in Bitcoin for the last 10 years, let's look at the returns. And so in 2014, Bitcoin gave a negative 29.99. That means in 2014, if you are holding Bitcoin, your money would have reduced by 29%, right? Obviously not good. But in 2015, Bitcoin gave a return of 34.5%. In 2016, it gave a return of 123.8%. In 2017, Bitcoin gave a return of 1,368%. In 2018, Bitcoin gave a return of 73.6%. In 2019, it gave a return of 22.2%. In 2020, Bitcoin gave a return of 303%. And in 2021, it gave a return of 59.7%. And in 2022, it gave a return of negative 64%. In 2023, it gave a return of 155%. So clearly, it is not evenly distributed. There are some years where Bitcoin went into the negative. So out of, from 2014 to 2023, you realize that 3 years Bitcoin gave negative returns, right? And so if you are to strike the average in the last 10 years, you realize that Bitcoin gave nearly 85% per year, okay? And that's the average. So in the average every single year, Bitcoin gave 20. And so if you're holding Bitcoin for the last 10 years, you averaged 85% growth of your assets. Your interest was about 85% growth of your assets every single year, which is, you are not going to get this anywhere. The stock market, as a lot of people have used to become millionaires, averages, let's say 10% every single year, and Bitcoin is giving 80%, right? And so I believe that if you quickly get on Bitcoin and you decide to invest in Bitcoin, yes, it is very volatile. There will be times where you feel like your money will go down, but for the long term, I believe you are going to reap the gains, right? Now, the case for Bitcoin, yes, extremely volatile, but why do I think Bitcoin is here to stay? I'm going to go to the charts so you understand. I'm going to do technical analysis so you understand. But first, I think that at a point, let's say in the 2014s, people thought Bitcoin was a bubble. But now we've gotten to a point where fund managers, financial institutions are now into Bitcoin. And so if there is a point or there is a time where you'd really believe in Bitcoin, it is this particular moment, right? We've gotten to a point where countries are now believing in Bitcoin, okay? In America, Donald Trump, we all know Donald Trump actually is setting policies for America to be holding Bitcoin as a reserve, okay? And so it is, for me, an indication to tell you that Bitcoin is here to stay. There are other countries also setting regulations to sort of accept Bitcoin. I'm a Ghanaian, and at this point, the Bank of Ghana is also setting regulations to sort of accept Bitcoin. Okay, so I feel like now it has come to stay. Governments are on board, fund managers, institutions are on board, and then and all that. Now the case for Bitcoin is, you see, let me show you by going on to the chart why I think Bitcoin one day is going to blow. And the value today, the value of Bitcoin, one Bitcoin is $117,000. There will be a point in time where Bitcoin might shoot up to $1 million, and I'm going to explain so you understand why. Now this is gold. Let me show you the chart of gold. This is gold, right? And this is the weekly time frame of gold. Now gold is an infinite resource. When I say infinite resource, we don't know the amount of gold we have in the world, right? It is an infinite resource. But if you look at the chart of gold, you realize that it has always been in an uptrend. See, it has always been in an uptrend, right? And I am a firm believer of the fact that the system is rigged in our favor. If you are someone who invests in stocks, you invest in gold, you invest in silver over a long period of time, the system is rigged in your favor, whether you like it or not. The system will be rigged in your favor. And I'm going to explain so you understand why I think the system is rigged in your favor. There is a concept known as dollar cost averaging. If you use dollar cost averaging on the markets over a long period of time, you realize that the system is indeed rigged in your favor. So this is gold, an infinite commodity. Yes, infinite commodity. I mean, saying infinite commodity means we don't know the total number of gold in the world, but still gold is in an uptrend. This is silver. We don't know the total number of silver in the world, but if you check the charts of silver, you realize that yes, there was a point in time where silver went up, came down, went up, came down. You understand? But you know, it still has been in an uptrend, down, up, down, like that. But as I'm saying, if you understand the concept of dollar cost averaging, you realize that you don't even need the chart to be in an uptrend for you to make money. Okay, I mean, so let me explain what dollar cost averaging is. So dollar cost averaging is deciding to invest, right? You realize that you don't have a lump sum. So let's say you don't have $1 million, and so you'd want to invest maybe $1 million into gold. You want to buy gold or silver, let's say silver, right? But you don't have $1 million. But you tell yourself, okay, I have just $100 at the end of every month. So I'm going to use that $100 at the end of every month to purchase silver, no matter the price, no matter the level, whether it is up or it is down. I'm going to do that over a long period of time. I'm going to do that for the next 10 years or for the next 20 years. Now, if you are able to do that, right, and then you decide that on the 1st of every single month, you are going to spend $100 and you are going to use that amount of money to buy silver, to purchase silver, and you are doing that consistently for the next 10 years, chances are that by 10, 20 years, you become, even if you are not a millionaire, you have some good amount of money that you can live by, right? Even if it is not $1 million, you are going to have some good amount of money. And this is the explanation. So let's say silver was here and then you bought $100, right? Silver was at this level and then you bought $100 and you've been buying. Now, if you buy $100 at this point and then silver fell, you think that you've lost, okay? But then you still have to be consistent. So at the point where silver was here, okay, maybe you bought another $100. At the point where it got here, you bought another 100. At the point where it got here, you bought 100. Now, the time you bought 100 over here, and then they fell on that value of money, that $100, you lost, right? But when it got here, you bought. When it got here, you bought. When it got here, you bought. Now, as the price rose to this point, you realize that all the ones you bought over here will also gain. And they will recover for the loss you made over here and even more. Because probably when you got here, you bought more. You understand? And so that is the power of dollar cost averaging, not thinking about the level of the market, just buying over a long period of time. And then you realize that every single person who has used dollar cost averaging either on the stock market, either on commodities, right, equities and the likes, you realize that over a long period of time they actually become rich. Okay. Basically, if you read books like Seth Rami's I'll Teach You How to Become Rich, basically that's what it talks about. Just investing small amounts of money every single month into the market and just forgetting about it over a long period of time, over 10 years, over 20 years, and then you become a millionaire, right? You retire a millionaire. So basically, it's one of the easiest ways, just that you need to have patience. It's going to take a lot of time, but you need to do it, right? And so that's the concept of dollar cost averaging. So I'm just showing you this so you understand the strategy I want to use on Bitcoin. As I'm saying, you can follow me and then we see what to do. So basically, that's that. So let's go to our Bitcoin. So I hope I've been able to explain that concept, right? So let's go to Bitcoin. So as I said, so silver is an infinite commodity, but a lot of people have made money. A lot of people have become millionaires and probably even billionaires with it. But the case for Bitcoin is that we don't need Bitcoin to always be in an uptrend for us to make money, right? We don't need Bitcoin to be in an uptrend for us to make money, as I explained with silver. So Bitcoin, I can decide to buy Bitcoin at this level and it can decide to fall, right? I'll lose money, obviously. Maybe this year, with all the investments I made, if Bitcoin fell throughout the year, maybe I'll lose money. But there will be a point, maybe the next year, maybe the next 2 years, maybe the next 3 years, where Bitcoin might rise up to this level again. And rising up to this level might make or might recover for all the losses and even more. Might even get me times 2, times 3, times 4 of all the losses I made. So you need to understand that you need to do it over a long period of time, right? Yes. And so we don't even need Bitcoin to trend in an uptrend for this strategy to work. Whatever level it is at, we are going to use it to our advantage, because I personally believe the system is rigged in our favor, right? But it is very unlikely for Bitcoin not to be in an uptrend in the next 10 years. It is extremely unlikely. 10 years ago, I think Bitcoin, the value of Bitcoin 10 years ago was in 2015. The value of Bitcoin wasn't even up to $1,000. And I tell you, if someone should tell you that Bitcoin 10 years to come, right, in 2015, someone told you that Bitcoin in 2025 will be 117,000, you would have told the person that, well, they are delusional. But today we are here. And so I strongly believe that in the next 10 years, Bitcoin might go to $1 million. Now, this is why I'm saying this. This is what I'm saying. Bitcoin is a finite commodity. Unlike gold, unlike silver, Bitcoin is finite. When we say finite, we know the total number of Bitcoins, right? So, basic accounts. If you know the total number of a commodity, and then you understand that it is depleting, there will be a point where it becomes scarce. And so there is something called supply shock, right? There will be a point where that commodity, everyone knows that commodity is depleting, is going out. And so it has become scarce. There will be a point where every single let's just check something. So let me just show you something. So let's just check the total number of Bitcoin so you understand what I'm saying. So Bitcoin currently, someone will ask, how do we get Bitcoin? Bitcoin currently is mine, right? So it says there are approximately 20 million Bitcoin in circulation as of 2024. Once the number of Bitcoin in circulation reaches 21 million supply limit, the protocol will no longer issue new Bitcoin. The circulating supply of Bitcoin is expected to reach the max supply limit of 21 million coins near the year 2140, right? And so it says that approximately there are 20 million Bitcoin in circulation as of 2024. And then once the number of Bitcoin in circulation reaches the 21 million supply limit, the protocol will no longer issue new Bitcoin. So there will be a point in life where there will be no new Bitcoin. The number of Bitcoins that will be circulating will be the ones that are currently in the system. There will be no new Bitcoins. And so there's a huge supply shock in the future that's going to happen, because demand and supply, we all know, if there's a commodity and then there's a point in time where that commodity is scarce, what happens to the price is it shoots up automatically, because now that commodity is scarce and a lot of people are going in for it. And so if you realize, anytime that oil is scarce, there's shortage of oil, the price of oil goes up. It's simple demand and supply, right? If you understand the cons, there's simple demand and supply. So this is the case for Bitcoin. Bitcoin is a finite commodity. It's going to get finished at a point in time. Countries are buying into it. Institutions are now getting into it. And I feel like there'll be a point in time where individuals, even individuals it will be very difficult for individuals to be holding Bitcoin, because it will be very expensive, right? And so it looks bright for the future. So this is what I think is the case for Bitcoin. The future for Bitcoin actually looks bright. I see Bitcoin getting to $1 million at a point in time. Might not be today, might not be tomorrow, but at a point in time, Bitcoin is obviously going to get to $1 million. And so imagine that you've been buying Bitcoin every single month consistently, right? If it gets to $1 million, it's good for you. But even if it doesn't, I've explained the concept of dollar cost averaging. So even if it doesn't, still, you are going to make money from it. You don't need Bitcoin to go up to make money by using dollar cost averaging. All you need is, let it just get to this level. Let it go down. Let it come back again. Let it go down, right? Because at this level, we know that Bitcoin might fall. Even if Bitcoin gets to 20,000, 30,000, you can't tell me that Bitcoin is not going to come to 100,000 back again. Now, if you understand the markets, right, you understand that what I believe the market does is as so above, so below, right? As above, so below. So if you see the market at a level right now, and then it goes down, the market will surely come back to that level, right? And so even if Bitcoin market falls, just be buying it, okay? You think you'll be losing for maybe next 5 years, just be buying it, right? If it goes down to $10,000, just be buying it, okay? It will just take a year for Bitcoin to go back to, let's say, $100,000, and then you realize that all the times you bought when it was down, you've made huge gains, right? And so that's the case for Bitcoin. That's what I think is going to help in this strategy. So that's why in the last 10 years, Bitcoin lost 29%, sometimes lost 73%, but then also made gains of over 1,000%, because it's always going to go up. It is always going to go up. It has limited supply. It's basic econs. It's simple. If you don't understand this, I'm sorry. I don't know what else you should understand, right? So, but this is not, I'm not a financial analyst, so this is not financial advice. But as I'm saying, this is 2025. I don't know when you are watching this, but this is a strategy I'm willing to do for the next 10 years. So let's go to the calculation and then see for the next 10 years what we are expecting to make from Bitcoin. Let's use compound interest calculator. So there's something called the compound interest. Compound interest is a concept in investments where all you need to do is put in money, right? Just put in money, small amount of money consistently, and then you realize that after some number of years, it works magic for you. Okay, So that's what we call compound interest. It is believed that Albert Einstein said compound interest is a wonder. It's a wonder of the world. Now, with compound interest, let's calculate. So suppose, I don't know where you are watching from, but I am a Ghanaian. So supposing I'm planning to put 200 cedis every single month into Bitcoin. So I want to buy 200 cedis worth of Bitcoin every single month. Now, if I do that for the next 10 years, and I'm using the annual interest rates for the last 10 years, which was 85%, right? I'm not saying you are still going, for the next 10 years, you are still going to get 85. That's not what I'm saying. But just for the purpose, we could go more, or it could be the same, or it could even be less, right? But for the next 10 years, let's say Bitcoin performs just as it did for the last 10 years and gives us average of 85%, then it simply means that in the next 10 years, you are going to make close to 2 million Ghana cedis. We just, as you invest just 200 cedis in the next 10 years. And so you don't care, in the next 10 years, you set a date. You are telling yourself, on the 1st of every single month, I'm going to buy Bitcoin. On the 1st of every single month, I'm going to buy Bitcoin. And then you are just buying 200 cedis worth of Bitcoin, 200 cedis worth of Bitcoin, 200 cedis worth of Bitcoin. If everything goes according to plan, then again, this is not financial advice. If you want to do this, please make sure you understand what you are doing. One thing about investment is, if you don't understand the space, don't put your money in, right? I've been in the crypto space for a while now. I have a diploma in cryptocurrency. I've been trading cryptocurrency for a while now, so I would say that I am really not a novice, right, in the space. I've been in the crypto space for, let's say, should be close to 8 or going to 10 years now, right? So I sort of understand what I'm saying. Okay, so if you don't know what I'm saying, you don't understand anything I'm talking about, then this is not for you. Okay, and it's okay. It's okay. If you don't understand, don't put your money in there. So if you're a Ghanaian and you are putting 200 cedis every month into Bitcoin, and we are saying that we just want Bitcoin to perform like it did in the last 10 years, then after 10 years, you are going to likely make close to 2 million Ghana cedis. Okay, so 200 cedis for 2 million. Now, if you are putting in $200, then you know you are going to make close to $2 million, right? Hopefully. Okay, so that is the power of compound interest. Let me show you the craziness of compound interest. So supposing that in the next 10 years, right, you've been able to do this, and then you've made, let's say, $2 million, and then you decide to run it again, same strategy for the next 10 years, okay, for another 10 years, making it 20 years. And this is where you understand why Albert Einstein allegedly spoke about compound interest. So if you decide to do that again for the next 10 years, look at the figure, close to $1 billion. So you see why compound interest is crazy. So you did 200 cedis, or let's say $200. You did $200 every month for 10 years. You made $2 million with the same strategy. And supposing the interest, the annual interest was the same for another 10 years, you'll be making close to $1 billion. So from $2 million to $1 billion. Crazy. Compound interest is crazy, right? Crazy. So you use $200 to make $1 billion in 20 years. Sounds crazy, right? Yes, that's how compound interest works. So we'll be using two concepts, right? If you understand and you want to do this with me, cool. We'll be using two concepts: the dollar cost averaging and then the compound interest. So yeah, this should be fun. Yeah, if you want to do this, please just do this with your throwaway money, right? an amount of money you don't really regard, an amount of money you think, oh, this one, just forget about it. Don't care. Don't be checking your portfolio. Okay, we are going for the long run. Don't be checking your portfolio. Okay, and that's the way. If you read every book on how to become rich or how to become wealthy, any financial development book, it tells you that is how you build wealth. You build it over a long period of time. So let's see how this goes. Okay, so yeah, hopefully we'll meet. We'll be documenting this until 2035, right? So yeah, thank you.